welcome to the Global View on ausbiz, the show where we look at ways for investors to make money beyond the ASX-listed universe. I'm your host, Juliet Sarli. US markets were mixed overnight, with the Dow falling while the S&P 500 posted its first win of the week. Tesla's positive earnings forecast boosted the Nasdaq, but broadly speaking, sentiment was somewhat shaky. Most of the S&P sectors were in the red as other earnings reports and pressure from lower but still high Treasury yields weighed. Now, when it comes to Tesla, shares were up 22%, the biggest one-day rally since May 2013. Elon Musk's EV giant reported strong earnings and predicted 20 to 30% sales growth next year. A gauge of the Mag 7 hit a 3-month high. Shares in UPS and Economic Barometer jumped more than 5% after returning to sales and profit growth. IBM lost more than 6% after missing third quarter revenue estimates. Honeywell's results also failed to inspire the market. Boeing lost more than, close to 2% rather, this after factory workers voted to reject a contract offer and continue a more than 5-week-long strike. And Southwest Airlines lost 5.6% after earnings and after it reached an agreement with activist investor Elliott Investment Management. On the economic front, new applications for US unemployment aid unexpectedly fell last week, but the number of people collecting benefits in mid-October was the highest in nearly 3 years, indicating it's becoming harder for those losing jobs to land new positions. Treasuries rebounded after days of losses. The benchmark 10-year note down 3.4 basis points at 4.21% after reaching 4.26% on Wednesday, which was the highest since the end of July. The US dollar slipped as data supported views for a slower pace of rate cuts by the Fed. Looking at commodities overnight, oil prices eased about 1% in volatile trade on reports the US and Israel will try to restart talks on a possible ceasefire in Gaza. Brent and WTI futures both down by 0.8%. Gold prices rose to near record highs amid safe haven demand from persistent geopolitical concerns and as investors sought safety from the US elections upcoming on November 5th. And when it comes to Bitcoin, it is tracking higher at $68,221 a coin. Well, I caught up with Peter Cardillo, who gave us some insights a little earlier.
Well, I think the sentiment remains positive. Obviously, the earnings season so far has been better than expected. Of course, there were a few misses. We saw that with Starbucks and IBM, but in general, the earnings have been good. And Tesla surprised the market with strong revenue growth. And I think what the market is, going through now is a bit of nervousness in the sense that the elections, are up for grabs. Anyone could win this election. And I think the market is fearful of a Trump victory, because if he proceeds with his tariff hikes, that would probably mean higher inflation at the consumer's level. And that would also mean that the Fed is likely to reverse its stand on cutting interest rates. So I think as we get closer to the election, and until there's a clearer picture of who may win or who may not win, obviously the market is going to be subject to some sort of jitters.
A lot of momentum as well in terms of what we're seeing in the bond market, particularly as we await the US election. Peter, what are you seeing in terms of what the 10-year is telling us?
Yeah, what the 10-year is telling us is simply this, that the market needed to readjust from the Fed's previous stand of being somewhat more aggressive. And as a result of that, we saw the 10-year get as high as 425, but it did back off today. And I think the reason for that is we had a mixed bag of macro data this week, and probably the fact that the market probably may have reached a peak level here, as it already discounted the Fed's next move.
Let's talk about what we're seeing as well with the safe haven play, particularly as we look at what's happening in the Middle East and looking at the US election. I mean, gold just continues to be parabolic, if you will.
Yes, indeed it does. And I'm looking for gold prices to soon hit $2,775 in the short term, and then maybe just a little bit of pullback, consolidate around that 2725 area, and then I think we get into the final leg of approaching 3,000 by year end. Reasons being is that we have continuous geopolitical problems, soaring deficits. That's probably the real reason why we're seeing this strength. And of course, and of course, we have central banks that continue to buy gold. And another threat would be going back to what I just said a few moments ago, that if Trump is elected and should proceed with his tariffs hikes, that would add one more reason to be bullish on gold.
What about its peer, if you like, or the one that's always behind it, silver? I mean, if you've missed the gold trade, do you look at silver because it's also moving higher?
Sure, absolutely. With the economy pretty much on solid pace here, from an industrial perspective, demand is holding up pretty good, and I expect it to continue. And then, of course, it follows its pair on the rest of the global concerns. And so I think we've established newer highs here. The next stop is probably going to be somewhere between 36.50, 37.50, and then by year end, possibly $40 an ounce.
Where do you stand with regards to where the dollar is going to trade, Peter, particularly in the next couple of weeks as we await the election, and the fact that it could be a drawn out result as well?
Yeah, well, the dollar has reversed course, and the reason for that is because yields have gone up, and the prospects of the Fed being less aggressive is actually positive for the U.S. dollar. Now, we all know that during the previous Trump administration, he always complained about a strong dollar and never really got his wish, because the dollar was quite strong during his administration. And so I suspect that, if he should win, that just simply means perhaps more isolation, perhaps more trade barriers, and that would be beneficial for the U.S. currency. So there's a good possibility that we stay at these high levels. Of course, the high deficit and falling oil prices are also a positive for the dollar, but it all depends on the politics of the next administration.
All right, Peter Cardillo from Spartan Capital there. Now, of course, we're focusing very much on earnings, particularly the Mag 7. Earlier, I spoke with Arun Sundaram, who's looking forward to Amazon's results next week.
Of a buy rating on Amazon. We're still bullish on the long-term story for Amazon, but I would say we're probably leaning a little more cautious than we have in previous quarters. And I say that because Amazon is starting to ramp up their investments. They're beginning a big investment cycle right now. CapEx is expected to increase 28% this year, probably another 10% next year. They're also, they have this business called Project Kuiper, which is a satellite business where they're launching satellites into the sky. They're just ramping up production costs related to Project Kuiper. So these are all added expenses for Amazon. So while we do see operating margin expansion over the next year or two, we probably won't see the outsized gains that we saw over the last few years. And at the same time, expectations for Amazon have increased over the last few years. So, expectations are high, and there are some headwinds in Amazon's story right now. So we're still leaning a little bit cautious, but we still do have a buy rating on the stock.
So we're gearing up to some pretty big shopping days as well, and the likes of Christmas too. How is that expected to fare for Amazon?
Yeah, so I would say generally, not just Amazon, but for retailers in general, the street is a little bit cautious right now. There are a few headwinds this year. One The obvious one is, the consumer spending environment has softened this year. Two, there's an election here in the U.S. and there's a lot of volatility around election season. People tend to not shop as much during election cycles. And then number three, this year is actually a shorter holiday season. So there are 5 fewer days between Thanksgiving and Christmas this year. So that's going to be another headwind for retailers. But we do believe that the big box retailers, the large retailers, will fare better than others. We think Amazon, Walmart, Target, Costco, they'll be the winners this holiday season, given their broad assortment of goods, their focus on value, their strong e-commerce business. I think that will bode well for these larger retailers.
What should we read into the news that Amazon is also engaged in this collaborative effort with the White House and other tech giants to bolster internet censorship evasion tools? So basically the ramp up of VPNs here.
Yeah. I mean, I would say that, Amazon's been working with the government on a host of issues. This is just one of it. Sometimes they're sometimes they're on the same side as the government, sometimes on the opposite side of the government. For example, the FTC last year has sued them, arguing that they're a monopoly and they want to break them up. So yeah, I mean, I think the regulatory and risks are always there for Amazon. I think that's always been kind of baked into the stock. So we're not overly worried about any regulatory or litigation risk at this moment.
All right, so let's get to your target though. You have trimmed your 12-month target to 219. Just tell us, I guess, what the thesis was behind that, and what happens if Amazon disappoints next week?
Yeah, we did. So we actually took down our target price. It was 225. We brought it down to 219. Still some sizable upside, but the reason we brought it down a little bit is we did bring down our estimates, our earnings estimates over the next 2 years, and again, it's because of this investment cycle that they're ramping up in. I think longer term, we're still very bullish on Amazon. They are they're a margin story, they're a free cash flow story. I think over the next 5 to 7 years, we'll likely see margin expansion at Amazon, given that its retail business is starting to become more profitable. Number two, its advertising business is growing really rapidly, and that's a very high margin revenue stream, advertising. And then number three, AWS, their cash cow per se is really firing on all cylinders right now. AWS grew 19% last quarter. That was the fourth consecutive quarter of accelerated growth. And right now, really the opportunities in the AWS business are around generative AI. And I think there was some skepticism in the street that maybe Amazon was a little bit behind in the whole generative AI race, especially against Microsoft. But I think the last few quarters really told us that Amazon is really on the front foot here, and they're really winning in the generative AI space. So that's generative AI right now is a multi-billion-dollar business for Amazon, whereas the entire AWS business is over $100 billion run rate. So I think there's still a lot of room to grow in AWS. And again, that's a very high margin business for Amazon. So as things like advertising and AWS continue to grow faster than retail, which is a low margin business, that bodes well for the overall margin story, free cash flow story for Amazon.
So longer term, still very bullish on this company.
Yeah, exactly. Yeah, a little bit cautious in the near term, given the ramp up in all these investments and costs, but longer term, we're still very bullish.
All right, CFRA Research, Arun Sarandamaran there speaking to me about Amazon. Look, it looks like we might have a pretty positive start for Friday. We are expecting a gain of around 0.2%. We're going to be focusing very closely in on WiseTech shares. Stick around, the Open with Andrew Gagan coming up next.